Are you ready to unlock the secrets of real estate investing? I'm here to guide you through the exciting world of real estate investing. Subscribe for weekly tips and insights. 1. Educate yourself. Educating yourself is the cornerstone of success in real estate investing. It involves immersing yourself in the fundamentals of the industry, understanding various investment strategies, and staying updated on market trends and regulations. Begin by reading books authored by seasoned investors, attending seminars, and exploring reputable online resources. By familiarizing yourself with terminology, concepts, and best practices, you'll develop a solid foundation to build upon as you embark on your investment journey. Moreover, education extends beyond theoretical knowledge to practical experience. Consider shadowing experienced investors, joining local real estate investment clubs, or seeking mentorship opportunities. Learning from the experiences of others and gaining hands-on exposure to different aspects of real estate investing will help you navigate challenges, identify opportunities, and refine your investment approach. Remember, the more you invest in educating yourself, the better equipped you'll be to make informed decisions and achieve your investment goals. 2. Set clear goals. Setting clear goals is essential for real estate investors to define their investment objectives and chart a strategic course of action. Begin by considering what you may aim to achieve through real estate investing. Are you seeking long-term wealth accumulation, passive income streams, or short-term capital appreciation? By clarifying your objectives, whether it's building a retirement nest egg, generating rental income, or flipping properties for profit, you can tailor your investment approach accordingly. Once you've identified your overarching goals, break them down into specific, measurable targets. For instance, determine the number of properties you aim to acquire, the desired rate of return on your investments, or the time frame within which you expect to achieve your financial milestones. Additionally, consider factors such as risk tolerance, time horizon, and personal preferences when setting your goals. By establishing clear and achievable objectives, you'll not only stay focused and motivated, but also have a benchmark against which to evaluate your progress and adjust your strategy as needed. 3. Research local markets. Researching local markets is a crucial aspect of real estate investing, as it provides insight into the dynamics that influence property values and rental demand. Start by understanding key factors such as population growth, job opportunities, and economic trends in your target area. Cities experiencing population growth and job creation typically have higher demand for housing, driving up property prices and rental rates. Analyzing demographic trends can also help identify emerging neighborhoods or areas poised for growth, offering opportunities for investment before prices escalate. Additionally, research the supply and demand dynamics specific to the local real estate market. Evaluate factors such as inventory levels, housing construction activity, and rental vacancy rates. Low inventory levels and high demand can create a seller's market, where properties sell quickly and prices rise. Conversely, an oversupply of housing or high vacancy rates may indicate a buyer's market, presenting opportunities for negotiation and potentially lower purchase prices. By understanding these market dynamics, investors can make more informed decisions about where to invest and which types of properties offer the best potential for returns. 4. Start small. Starting small in real estate investing is a prudent approach, especially for beginners. It involves focusing on acquiring properties with lower capital requirements and manageable levels of risk. One common starting point is investing in a single-family home or a small multifamily property, such as a duplex or triplex. These properties typically require less upfront investment compared to larger commercial or residential developments, making them more accessible to novice investors. Additionally, smaller properties are often easier to manage, as they typically have fewer units and lower maintenance costs. Starting small allows investors to gain valuable experience while minimizing financial exposure. It provides an opportunity to learn the ins and outs of property management, tenant relations, and the overall real estate investment process without taking on excessive risk. As investors gain confidence and expertise, they can gradually scale their portfolio by reinvesting profits or leveraging their experience to pursue larger opportunities. Starting small also offers flexibility to adjust investment strategies based on market conditions and personal preferences, setting a solid foundation for long-term success in real estate investing. 5. Build a strong network. Building a strong network is essential for success in real estate investing. Networking allows investors to connect with a wide range of industry professionals, including real estate agents, lenders, contractors, property managers, and fellow investors. These connections provide valuable insights, resources, and opportunities that can help investors navigate the complexities of the real estate market more effectively. Attending local real estate meetups, joining investment clubs, and participating in online forums are all excellent ways to expand your network and learn from others' experiences. A strong network can also open doors to potential partnerships and collaborations, allowing investors to leverage each other's strengths and expertise. For example, partnering with an experienced real estate agent can provide access to off-market deals and valuable market insights, while collaborating with a skilled contractor can streamline renovation projects and reduce costs. Additionally, networking can help investors access financing options, such as private lenders or equity partners, to fund their real estate ventures. By nurturing relationships within the real estate community, investors can build a support system that enhances their chances of success and enables them to achieve their investment goals more efficiently. 6. Understand financing options. Understanding financing options is crucial for real estate investors as it determines how they will fund their property acquisitions. Traditional financing methods, such as conventional mortgages from banks or credit unions, offer competitive interest rates and terms for investors with good credit and stable income. However, these loans typically require a substantial down payment and may have strict qualification criteria. On the other hand, alternative financing options like hard money loans or private lending can be more flexible and accessible, especially for investors with less than perfect credit or those looking to finance renovation projects or quick flips. While these options often come with higher interest rates and shorter repayment periods, they can provide quick access to capital without the lengthy approval process associated with traditional mortgages. Moreover, creative financing strategies like seller financing or lease options can offer unique opportunities for investors to acquire properties with minimal upfront costs. Seller financing involves the property seller acting as the lender, allowing the buyer to make payments directly then over time. This arrangement can be beneficial for investors who may not qualify for traditional financing or prefer more flexible terms. Lease options, on the other hand, allow investors to control a property through a lease agreement with the option to purchase it at a later date. Understanding these various financing options empowers investors to tailor their strategies to their specific financial situations and investment goals, ultimately maximizing their potential for success in real estate investing. 7. Conduct due diligence. Conducting due diligence is a critical step in the real estate investment process, ensuring that investors thoroughly evaluate properties before making purchase decisions. This comprehensive investigation involves gathering and analyzing information about various aspects of the property, including its physical condition, financial performance, legal status, and market value. It typically begins with a thorough inspection of the property, assessing its structural integrity, systems, and potential repair or renovation needs. Engaging qualified inspectors or contractors can provide valuable insights into the property's condition and help uncover any hidden issues that may impact its value or profitability. In addition to the physical inspection, investors must conduct financial due diligence to assess the property's income-generating potential and expenses. This involves reviewing financial documents such as rent rolls, profit and loss statements, tax records, and utility bills to verify income and expenses. Analyzing comparable sales in the area can also help investors determine the property's market value and potential for appreciation. Moreover, investors should conduct legal due diligence to identify any liens, encumbrances, or legal issues that may affect the property's ownership or title. By conducting thorough due diligence, investors can mitigate risks, make informed investment decisions, and ultimately maximize their chances of success in real estate investing. 8. Manage risk. Managing risks in real estate investing is crucial to safeguard your investments and financial well-being. One key aspect of risk management is conducting thorough due diligence before making any investment decisions. This involves researching the property, its location, market trends, and potential risks associated with it. For example, you'll want to assess factors like the neighborhood's crime rate, vacancy rates, economic stability, and potential for natural disasters. Additionally, conducting property inspections and obtaining professional assessments can help identify any underlying issues or potential pitfalls that could impact the property's value or profitability. Another important risk management strategy is maintaining adequate insurance coverage. Insurance can protect your investments from unexpected events such as property damage, liability claims, or loss of rental income due to tenant defaults. Depending on the type of property and your specific risks, you may need different types of insurance, such as property insurance, liability insurance, or landlord insurance. Regularly reviewing and updating your insurance policies to ensure they provide sufficient coverage is essential to mitigate risks effectively. By being proactive and vigilant in managing risks, real estate investors can minimize potential losses and maximize the chances of achieving their investment objectives. 9. Stay updated. Staying updated in the realm of real estate investing involves staying informed about market trends, regulatory changes, and economic indicators that could impact your investments. This means keeping a close eye on factors such as interest rates, employment rates, population growth, and housing supply and demand dynamics. By monitoring these indicators, investors can gain valuable insights into the health and direction of the real estate market, allowing them to make more informed investment decisions. Additionally, staying updated on local market conditions and trends specific to the areas where you own or plan to invest in properties is essential. This might involve tracking rental rates, property values, new developments, and changes in zoning regulations or local ordinances that could affect your investments. Furthermore, staying updated also involves regularly assessing the performance of your investment properties and adjusting your strategy as needed. This includes monitoring rental income, vacancy rates, expenses, and property maintenance needs. By staying proactive and responsive to changes in market conditions and property performance, investors can identify opportunities to optimize their returns and mitigate potential risks. Additionally, staying engaged with industry news, attending real estate events, networking with other investors, and seeking out educational resources can help investors stay at the forefront of developments in the real estate market, enhancing their ability to make sound investment decisions. 10. Network and learn from others. Networking and learning from others are invaluable strategies for real estate investors looking to expand their knowledge, find opportunities, and navigate challenges more effectively. By connecting with fellow investors, industry professionals, and mentors, investors can gain insights, share experiences, and access a wealth of collective wisdom. Networking provides opportunities to learn about different investment strategies, emerging trends, and best practices from those who have firsthand experience in the real estate market. Engaging in conversations, attending networking events, joining online forums or local investor groups, and seeking out mentorship relationships are all ways to build a strong network within the real estate community. Moreover, learning from others allows investors to benefit from the experiences and expertise of those who have achieved success in real estate investing. Mentors and seasoned investors can offer guidance, advice, and practical tips based on their own triumphs and setbacks. By listening to their stories, asking questions, and seeking out mentorship opportunities, investors can accelerate their learning curve and avoid common pitfalls. Additionally, collaborating with others on joint ventures or partnerships can provide access to resources, expertise, and opportunities that may not be available when working alone. Ultimately, networking and learning from others fosters a supportive community where investors can grow, learn, and thrive in the dynamic world of real estate investing. Don't forget to subscribe and hit the notification bell to stay updated on our latest videos. Thanks for watching. Don't forget to like the video. Also share your thoughts and comments below.